it's Ishmael or Pluto. Today I'm going to be going over our morning strategy with you guys. I could have went over it in screenshots, but I just wanted to be more thorough and so that you guys understand it and you guys can leave comments on questions that I can answer. So basically, this yellow area right here is our pre-market box, and in the morning we always have a pre-market strategy that we use that gives us a really good win rate, I'd say, and especially with the risk to reward ratio we have during the strategy, it doesn't even matter if you have like a 40% win rate, you should still be profitable. But we have a way higher win rate than that, I'm pretty sure. So I'll go over it with you guys real quick. So basically, I'm gonna go look so what we look for is pre-market relative low and pre-market relative high. So obviously this is pre-market high because this yellow area is all pre-market, and this is after hours, and then this is like intraday trading, like actual hours of New York Stock Exchange, like open to close. And then this is pre-market. So 3 a.m. to 8:30 a.m. Central Time, or 4 a.m. to 9:30 a.m. Eastern Time, which is New York Stock Exchange open at 9:30 a.m. So this is the actual low. Relative low would be right here, right before market open, which is like how we take trades. This would be the actual high. Relative high would be right here. This is a perfect high. So this day we took trades. So this is how we took a trade that day. So we looked for. This is what we looked for. We looked for pre-market high, which was right here. Pre-market relative high. I should probably put relative in there. Relative high. So it's right here, at this area right here. And then this was pre-market relative low, right here. And then see, we broke through here. And obviously you shouldn't be getting in this trade because there wasn't like the candle, no candles closed under it. But even then, a lot of people still might have taken the trade. Like us, we did take this trade in live trading because of how far it retraced downwards. But right here at market open, this blue wick went up to pre-market relative high, and then came back down, bounced off of the relative high, bounced off of the relative low, and then closed here, closed right in the middle, and then it came right back down. And so, let's say we took this trade, because we did, right here. There was potential downside of like this like whole way down, right? We obviously there wasn't that, and so we got stopped out right here at our high. So let's say we took like a good 25% loss right here, but it doesn't matter why, because it broke above pre-market high, like right here. You see how it from down here we took our position like down here, and then it broke above pre-market relative high, right? So then we start taking a long position up here and keeping our relative our nearest low as our stop loss, not the relative low. So this is our low, and then you want to have it like at least 4 pips below, so it's at 39, and you want to take it to like 44 or whatnot, just in case. And so alright, so you want to have your first take profit. Holy crap, Discord's blowing up today. I mean, it's the morning, so, or it's not the morning, it's 3 p.m. What the hell am I talking about? You want to have your first take profit, and you have your second take profit. Your first take profit would be, my first take profit was right here, because this was pre-market liquidity right here, because you see up and then bounce down, so there was liquidity right that lied here. So I had my first take profit right here, and my second take profit, oh crap, my second take profit was at this pre-market high, like the all-time high of pre-market, and then this liquidity right here. And so we retraced back down into it and then bounced up. I didn't catch all of it. I sold right here for 130% gain. So really, even if the next day you take another 25% loss, and the next day you take another 25% loss, and the next day you take another 25% loss, it wouldn't really matter. If you just have a good risk to reward ratio. Yeah, take profit 3 somewhere around here, or 4. Really, it just depends on. I had to guess right here because I didn't have time to go to the 1 hour chart and look for liquidity zones and then mark those out. But yeah, let me run this down real quick for the beginner traders that are having issues. This is a really simple strategy, by the way. It's like no SMC, like order block, fair value gap, like liquidity sweep type shit. Like I don't even look for equilibrium in this really, but really just look for pre-market relative high, pre-market relative low. You take the trade that goes either way. If it goes wrong, keep your stop loss above the other side. So other side, like we bet that it was going to go down right here. So the other side would be the upside, right? So our upside would be right here. And then we would keep our stop loss right here. So we would sell right here for a little loss. And then we'd hop in the other direction. And then we'd make money off that. So let's go to another. All right, let's go to another spot. Oh, that trade was already there from the other day. So at pre-market, this was already the high. So this would have been my high. And then it opened below. And this would have been my low right here. And then so we would have, so this is my pre-market high. This is my pre-market low right here. We would have gotten into a short position at this break right here. Keep our stop loss above, a few pips above pre-market high. And then we run this all the way down. Boom, we make hella profit. Like 30, I'd say about 40 to 45%, maybe even 50% based on the cons we get. Take profit 1 could be here. Take profit 2 could be right here. Take profit 3 could be right here, etc., etc. Let's look at another example. It's pretty simple when you go to look at it, and the win rate is absolutely fucking amazing. Pre-market relative high, pre-market relative low. You take a call, a long position at this break right here, a few pips below, because like see right here, like if our stop loss was right on here, we could have been stopped out. But I like to keep it a few pips below because that way it can bounce off of that support level and give us a runner. And then take profit could be right at this liquidity zone, and then that swept perfectly and came down. So you would have scaled out here right here on your first take profit. Works like a charm, guys. And right here, pre-market low, pre-market high. Oh crap, I need that. Take a short position right here. Stop loss above pre-market high, a few pips above. And you can ride this the whole entire day or however long. You just got to take some profit, scale out, let the rest of your contracts run, and then make absolute bank. But yeah, I think y'all are getting the gist of it. I can go a few more examples with you. If you guys understand, you can click off this video already. It's that simple. This one's a little choppy, but we'll still go over it because chop days, you'll still make money. So basically, pre-market low, pre-market high. You can take a trade right here based off of that break. Keep your stop loss above closest pre-market high, relative pre-market high, and then keep it a few pips above. And then you let this run. You wouldn't even be down for that long. Yeah, relative low, relative high. Take a position right here. Stop loss a few pips above the relative high. So stop loss at the high would be 33 pips. You keep it a little bit above, maybe at like 40 pips. And then there you go. That works well enough. I'd like to keep mine at like 45-ish just to be safe, because who knows how long a sweep could be. But I don't want to get stopped out right before a sweep, if that makes sense. So yeah, you run this down. Take profit could be somewhere like right here to here, in my opinion. It just depends on. Oh, really? Right here would be one of my take profits. So right there. Take one of my profits right there pretty fast, and then right there ish, and then probably some more down here ish. But yeah, you guys get the gist of it. It's really simple. Relative high, it breaks above, comes back down. That's barely a retracement. It probably opened. You probably wouldn't be able to get in on time on that. It would be good, like boom boom, and then yeah, relative low. Damn, I feel like I'd want to buy up here instead of down here. I probably would have up here. I'm not gonna lie. So that is way too far down in my opinion. Yeah, I'd buy up there. Take a short position. Let this run. Take my get a good to risk to reward. Yeah, I mean it works like a charm really. It really does work like a charm. It's beautiful. Even though we did take that one loss that week, but it was a 25% loss, and then at the end of that we ended up taking 130% gain, which was an absolute banger. If it was in live trading, you would get if you guys were in live trading, you would have seen it. Yeah, it was amazing. All right, I'll throw out more videos for you guys. It'll be short like this one. Hope you guys enjoyed. More profitable strategies to come because we have the yellow box strategy on the Fractal software that has an 85% win rate, and obviously premium exclusive. If you're watching this video, you're most likely in premium. So, yeah, you'll have it in a few days, or I'll teach you guys in a few days, the next few days. If you guys don't have a Fractal software login, DM me. I'll get you guys set up, or DM Atabay. If you go to the Fractal software channel, his @ is there, and you guys can DM him or me. We'll get you guys set up. Yeah, exclusive to you guys. Hope you guys enjoyed this video. I know it was it's pretty short, but I wanted to keep it short and make it easy to understand. Alright, appreciate you guys. Make sure you guys like and subscribe because that helps me grow. So I appreciate it. See you guys later.